Microphone check and screen share check, please. All right, let's go ahead and get started. Nightly strategy podcast for June 28th, 2022. We'll start with the market health check. So yesterday, we experienced that 5 or 6 day move off the 10-day low where the RL10 turned, and it moved all the way up to approximately the Bollinger Band mean. That's like almost a 3 sigma move. And then terminated yesterday, a little doji with a little bit of weakness. It was on the north side of the PSAR, which was a good thing. But today, slight gap up, momentary gain, and then sharp selling all the rest of the day to close resting on the top skin of the dragon. Now, the dragon has started to roll up. The RL30 has not, so we're not in an owl condition yet. The short-term momentum decayed today on the basis of that selling pressure. So we're about that far away. We're about $8 away, 3% from a collapsing dragon, stage 1, and then stage 2, another 4%. We're about 19% off the swing high, off the all-time high. Had a very large range day today, very directional. Supported when you have a large directional day in the direction of the trend, that is promising more of the same. That's what that is. That's a return to the dominant narrative. And this illustrates the point we've made before, that when you have these large, harsh sell-offs, a strong move in one direction in this case, that these little rebounds, leg one, if you will, when those are this successful and they get through the dragon and the PSAR, that's an alert to all the guys who are short this thing and say, hey, here's a chance to get short again on an improved price. So I can get short here instead of getting short down here. So this is just a pause that gets their attention. Aha. And this is potentially one of these. So you can get another move down here to the 30-day low and the 10-day low very easily. And then if that collapses, then it's really look out below. So this is the reason why the extreme move from Z2 up to Z0 doesn't increase my confidence that this is obviously going to be the move that happens. No. It simply says we're in a new critical state here, and we can easily see this move down to here or a move up in that direction. So this is precisely a critical state. We don't know which direction it's going to go, but you can make a tight risk box and then follow the price. And what happened today was, so if we put that box on yesterday, and then we just draw our standard risk box, you've seen me do this 10,000 times. We might have initially taken that long, and then when it failed, just cut it. And when it falls out of that risk box, also known as I should probably draw that as the yellow zone from yesterday. Now you get this nice follow through. So you don't have to be right. You just cannot stay wrong too long. Don't stay wrong too long. Now, similarly, tomorrow, our risk box is this yellow box, right? So any violation below today's low is an instant short with a target down to here. First, maybe the 5-day low, then the 10-day low. And you might even get a reinforcement from a break below the dragon, a break below the spine of the dragon, below the Z1. So you have this price ladder of things that are confirming moves to the downside. So you're not allowed to be surprised when those tripwires are tripped and they don't hold support. Those are like signs on the road. Warning, bridge surface freezes before rest of road surface. Now, similarly, a breakout above today's high, that's an instant long because it's now through the Bollinger Band mean, and the next target would be up here at the Z1, the peak of the dragon, and the peak of the RL10 is up in here as well, along with the 30-day high. So we've got some price ladders that we can go through. Now we notice that there's a gap here. So if it gets above this resistance level, above 396, it should traverse that pretty fast because there's no resistance over here in the way. And this will have cleared the resistance. And so that could really go. It didn't do that today. It rejected at the Bollinger Band mean and sold off. So that's a sign. And it's a sign that it's probably more of this coming, that downward pressure. Let me know in chat if that helped. All right, let's look at today's sectors. Excuse me. All right, let's look at the indexes first. So the S&P first, minus 2%. Ouch. The Qs were the weakest at minus 3%. So tech was the big fail today. Did not follow through. Now you had diamonds and the small caps down 1.6 and 1.8. Emerging markets were better at minus 0.6, and then above the cut line, treasuries at 0.47. So this was a vote away. These two is a vote away from the broad U.S. indexes, with tech in the weakest position of all. All right, let's look at the underperformers. So there again is the S&P at 2%. So wheat and precious 2.25%, tech, S&P tech 3%, the Qs 3.505, marijuana, Bitcoin, blockchain, biotech, the FANGs, consumer discretionary, global future of finance, blended large cap crypto, clean energy, Arc Genomics, Arc Innovation, Ethereum. That's all of the disruptors. That's all the discretionary bright future. U.S. Steel, individual targets 2.25. Let's go. Coinbase 8.5. Here's real disruptors in here. Bakkt 5%. Rivian, PayPal, Squarespace, and Tesla all down 5 to 5.5%. Tesla closing below 700. Crucial. His R10 is $6. Microsoft couldn't hold 3%. Apple, Robinhood, now some more steel companies, Cliff, U.S. Steel. Yeah, even Alcoa was in the negative today. So plenty of digital disruptors, but also steel companies and the broad tech index leaders. So this is a reversion back to that longer term trend of pain and suffering. This is not a good sign. What outperformed today? Well, again, there's the S&P. So here's that first collection of sectors. So staples, lithium, real estate, basic materials, finance, Mexico, lumber, commercial real estate, Brazil, the other lumber. So this is more of like your industrials and basic economy things, not a lot of sexy, groovy things except for the lithium batteries. Nothing fancy in any of those. Aussie dollar, here's the break even, or that's the breakout point where we started making money. Food, VIX, blended commodities, oil exploration, energy. There's your trend. Individual companies, Devon Energy, 2.9. Alcoa continues to buck the trend from the other steel companies. Alcoa is clearly better than Cliff and US Steel right now. It was only down 0.63, but not much else to choose from. And portfolio insurance beginning to cost a little more. So that's a downward sign for tomorrow too. And these are all more like flight to quality and defensive plays than sexy, groovy breakout plays, right? So that's kind of the trend. Let's look at the daily report. Go to the sniper trade of the day. Microsoft, standard risk box of about $1. Here was yesterday's close. It gapped down, crossed the dragon, so I bought it with a standard risk. It rolled over, came through the dragon, so I'm out for minus 0.5. It came down and hit the PSAR, so I'm short with a standard risk that takes me right to the top of the dragon. Here's the turning. Here's the big question mark. What's it going to do? You can see it's come down to the PSAR and it's starting to stall. It breaks down. This was an opportunity for a second position. Didn't take it. Comes down here, begins to stall some more. So I hang the half risk box on it. Give back half an R. It hits the PSAR dot. So that's about 1, 2, 3, 4. Minus 0.5, so about 3.5 on Microsoft to the short side. Follow the money, follow the price. This is where that you can see where that was starting to stall here. And then as it stalls, this is getting better. Now, when you see that rising up to the zero line, that's your zero line right here. When this is rising in the spring, it doesn't mean that price is going up. It just means that it has stopped failing at the same rate. So this is a change in season, but it doesn't mean everything that all is well. It just means that this is a place of contentment and a good place to exit. So about 3.5 there. We've seen the market health check already. Bearish normal. The short-term index got really weak today. It comes out of the overbought, starting to fail. We're reminded that this is risk off and dangerous. And you will recall yesterday, all of the US indexes were flashing those warning signals that this was that this might be a dead cat bounce. And so it could be one of those. It could be a second leg up. It was one of these. So if you had taken the mechanical signals, you're a happy camper. And that's why we pay attention to those, because it alerts us to a reasonable downside short trade. So that when we want it to go up, but we're seeing a lot of reliable signals that shorts could be rewarded, that should not fill you with confidence that the second leg up is certainly going to happen. No, it just says wait and see. And if it breaks out above there, then go ahead and follow it. But if it breaks down, make sure you cash your gains from the previous leg and then consider short-term tactical trades, particularly when they're in the direction of the primary trend in this bearish normal. Check or hold. Now, Nicole says that the she considered the MACD going up was a sign of rising prices. Now, the way the math works, you have a fast moving average and a slow moving average that are both going down. And so that creates a MACD that's going down, especially if this is going faster down than the slow moving average. So if you have a sharp move down, it's starting to actually pull away from the slower moving average. Now, when price starts to stabilize, those two, that fast moving average begins to just level off, but the slow moving average comes down to meet it. So that distance between those two is starting to diminish. And that's what causes the MACD to rise. So even though price is not rising, MACD will start rising. It's not until this gets to the zero line that you get an indication that the fast moving average has crossed over and is starting to go up. So that's why the spring can be very dangerous, because you may be getting a winter, spring, and then instead of following through, it reverts to the winter. So winter, spring, winter is a very strong short side signal, as covered in our hybrid trading course. Minimum pains, we're still looking pretty good in United Health and in the staples like Walmart, Coke. The energy, even though it had a nice bounce today, is still showing some oversold conditions. So there's still more room to the upside. And then Tesla rejoined the max pains today on its 5% sell-off. Some things to keep in mind. Breakdowns today in Nike. I fixed the NDX. So now when we have breakdowns below the previous low, this is Nike making a new 6-month low. So when you take a look at that, today's price action, and you look at the -1 to the -10-day look back, or in this case, the 6-month, if price breaks down below that, when you set this equal to 0 and 100, if price goes and breaks down below the look back period, you will get a negative number for the NDX, and that gets highlighted in red. Similarly, if it had broken out above, then that number would be in the green. So this is a quick way to get alerts on things that have made breakouts. You see the info paper in the Advanced Hybrid Workshop and Foundations course on how to read the NDX. Auto framers, Caterpillar, Chevron, DuPont. I really like Chevron because there was such good strength and energy. It would not surprise me to see a second day of follow through. So that should be on your radar. Oops. ETFs. Weakness in the Qs and tech and consumer discretionary. Nice rebound in oil exploration, oil and energy, handful of auto framers. Energy remains at the top of that. So I like the fact that it was strong today and still has the most room to recover to the upside. That feels pretty good. And there's energy and oil, ExxonMobil, Cliff, all of these better than 2-1. Looks good. Only gold was on the squeeze today because of such a large day. Godzilla is beginning to reemerge now on today's sell-off. So here's Nike was huge today. Painful, larger than normal 5-day Z-score and a 6 sigma 1-day Z-score with a 50-cent bar 10. That's not something you see every day. So let's go just take a look at what that looks like. Nike? Yeah, Nike. Yeah, so it was down 7% today. Clear the drawings so we can take a look at this guy. There's that purple box is our 150-day lookout. How the mighty has fallen. It's off over 40% from its swing high. There's the 30-day look back with our 10-day blocks. I never get tired of highlighting the importance of those turning points. When the RL10 gets to a peak and crosses the baby dragon, enters the dragon, spine, bottom of the dragon, PSAR flip box, short signal here, standard work. Same thing here, PSAR flip, standard long. The basis of sniper trading. So you can see how this is pushed to a new 5-day low, got past the 10-day low and 150-day low and the 30-day low, and closed poorly. So if this thing breaks below 102, just look out below. Here's your winter, spring, winter. See how it rejected the 0 line here? That's the beginning of winter. This is the beginning of winter. This was today's move on the 3-minute chart. There's your PSAR flip box. There's $1. So the standard risk box on this guy, 50 cents. So if you had a standard risk there. That's about right. And never touched. You get your first leg, second leg. You might have tried that one on an SSC. You wouldn't have lost money. And then the resumption of that paid. So there was a chance for 1, 2, 3, 4 pretty good moves today. And it's a 6 sigma move. So this thing is not over. And if this fails, look out below. Now, what if this was an overreaction? Because there were a lot of people that wanted to buy this on a dip because it was already so low, and then they all got smashed. So there was a lot of buying interest in this. That's what caused it to move up. So this could be interpreted by those people as, well, I'm going to buy more on the bigger dip. If they were buying the dip here and then they just got another 6% price break, guys with deep pockets might be saying, well, here's a chance to buy more Nike on sale on another 6% off. So would not be surprised to see this find support and begin to move tomorrow. All I know is that it's going to be in play. And that's what the Godzilla is all about. Is it in play? We want to find the movers. That's how you find the movers. The Godzilla setup and a 6 sigma 1-day score. Wow. Target and Bed Bath and Beyond, probably interesting as well. There's a couple large 1-day moves in there. And that's your Godzilla setups. In our tactical symbol set, Godzilla's in Cliff, US Steel, Marijuana, PayPal. There's a raging Godzilla right there. Let's go look at PayPal. Jesus. How do I miss this one? Minus 8%. Why in the world can I not see those? Oh, that's right. I gotta have a signal. I have to have an alert that when the collapsing dragon hits, that I can come trade this. Because that's just a range stat move. And then there's a collapsing dragon, there's a collapsing dragon, there's a collapsing dragon. When those little shelves break, what do you get? Instant collapse. That's why the collapsing dragon, number one pattern. Use your alerts. When could you have known that that was a support level? Oh, yesterday at the close. So how can we learn about that today then? What can we do today? Let's look at PayPal. Oh, geez. We called that one before. God damn it. Jiminy crickets. Yeah, that's the sign of pain and suffering abounding. Here's a rejection of your 10-day high in the PSAR and the fail and down here. And it's just got to fail through that and look out below. And what are they? Don't make anything. They're a financial services company. Look out below. PayPal better be on your radar tomorrow. Oh, the number one Godzilla setup. Let's look at Cliff and US Steel because we're here. There's US Steel. From 38 to 19. So that's minus 50% in a steel company. There's your PSAR flip box. There's your trend indicator. Here's your collapsing dragon. All it's got to do is get below about 18 and a quarter and look out below, because that's going to come all the way down and test the 150-day low at 18. And if that fails, yikes. Then it's down to 16. Or 15. Wow. Is that going to be painful? I mean, this whole sideways, happy trading range, it just got violated in a big way. Wow. Cliff. Same thing. Even more vulnerable, I would say, if anything, because they're a mid cap. And so here's where this guy could go. Ooh. That's already more than 50% sell off. If you're not looking at the longer term, you might not realize just how vulnerable this is. There's your flip box, your short signal. Tried one little dead cat bounce and the first day of failure. So if that fails, and if you can get short inside here, you're now postured so that if that breaks, that's scenario planning. I could talk all day about volatility, uncertainty, complexity, and ambiguity. But dude, that's all you got to see. You could take that course from VTI for $2,500 and learn scenario planning, but that's how you do it right there. We're already accounting for volatility by looking at the 5-day and the 1-day volatility and putting the stats on it. We're looking at uncertainty because we're looking at critical states and dojis, which could go in either direction. The market is already complex. You don't even need to have to worry about it. There's plenty of things. And then the ambiguity is also comes back to the doji, which says a move that terminates in a doji, that doji supports the narrative that that thing is a rest stop for the next move up, or it's the turning point for the next move down, or it has moved into perfect alignment for the current price. So that doji is perfectly ambiguous because it supports 3 different reasonable narratives that are mutually exclusive, and it equally supports all of them. So a doji is your perfect ambiguity. So when you add volatility plus the combination of uncertainty, complexity, ambiguity, what you have is compounded critical states. Welcome to the sniper world. I just saved you $2,500. All right, so those are the Godzillas. Those should be your priority targets for tomorrow. The sell-off was so bad today that there's nothing in the upside fireworks or popcorns. There's a number of good fence sitters, the ones that are sitting right in the middle of their trading range. And a lot of these are very one-day quiets after a strong 5-day move. That means these things are right in the middle of their trading range and had a noisy 5-day, but a very quiet 1-day. That means they terminated in a doji and are waiting to see which way the market wants to break. Nice. Duke Energy. Travelers. Yeah. Those are worth, those might be worth looking at. The S&P most quiet on the basis of the Z-score for 5-day. There's your volatility. These are your extremes of volatility, the absence of volatility and the extreme volatility. Johnson & Johnson should jump right out at you. 1.97 on a 5-day and a 3 sigma on a 3-day. That was a big collapse in Johnson & Johnson today. BR, don't know them, but 2.25 and 2.59, big moves. Johnson & Johnson. Yes, sir. Failure to follow through. This could not break out. This opened where it closed, could not even get to yesterday's high and started to roll over. And for a huge move, look at the size of that 1-day volatility. Holy cow, 4% intraday move in a pharmaceutical company. That failure to follow through is information. And that's what happens at the end of a nice 10-day run. And it gives back half of that whole move in 1 day. And that's why you got to respect when you're coming into the station and you just tested up in here and it doesn't follow through, you have got to respect the yesterday's low. You've got to respect yesterday's low in a doji, for crying out loud. Kenneth? That's what the 1-day trading range box from yesterday should be looking like. And you're playing for a breakout from your 0 state, a breakdown or a breakout. It broke down and you get this move. And it's getting ready to collapse again. So if it breaks below 176, you know what to do. Same thing, Broadridge Financial. Now, this is going to be nice because it's not a great big name. Here's what broke through the PSAR, so you got to enjoy that. And it could not hold. And when it broke below yesterday's close, that's an indicator. And when it broke below yesterday's low, that's a really strong indicator. And it closed very poorly. And tomorrow it could get to 135 pretty easily. And that's a $6 move. On a 50-cent R10, that's a 12-to-1 reward to risk ratio. And that's a scenario. Excessive volatility. You have the uncertainty of a move. Is it going to do this or going to do that? There's your uncertainty. The market is complex. And this move could either be the pause that refreshes, buy on a dip, or it's giving back in the collapse. So you have ambiguity. There's your VUCA. And where do those come from? Just by looking at the most volatiles. And there's BR, 2.25 and a 2.59. That number on the 1-day expanded Z-score tells you something really strong happened. And there's Johnson & Johnson that we just looked at. Same thing. Large scale 5-day Z-score and a large 1-day Z-score. That's what's in play. So that you can find things pretty fast if you know where to look, looking for the anomalies. All right. There's your stats on our tactical trading frames. Here's the sniper stats for our tactical symbol set, sorted by 5-day volatility. Look at diamonds in the 4th position. And a very large 1-day. That's the broad market right there. And then there's the Russell. The diamonds are the interesting one there. That's trouble for tomorrow. Here's Amazon. That's trouble in tech land. Big down day in Amazon. Anyway, and there's PayPal. Big down day in PayPal. Look out below tomorrow. All right, I've adjusted this so that we can start seeing those breakdowns now. This tells you the magnitude of large breakdowns and breakouts, right? So normally, if today's price, here's the 0-day today, and then so we're looking at -1 and -2. So if this was the 2 days ago and 1 day ago, you'd find the highest high, set that equal to 100, the lowest low, set that equal to 0. And then this is the size of the breakout. And in this case, you can see that is about half again. That's about half of that trading range. So that would instantly tell you about 150. So that tells you the size of the relative breakout. And these negative numbers tells you the size of the relative breakdown. So like Nike had a huge breakdown, and it made a new 10-day, 30-day, 90-day, 207-day breakdown. Big collapse in Nike. Fairly large in Johnson & Johnson, etc. So that's how you read that. This tells you why the breakdown in the Qs and tech was so painful. Big weakness there, and in blockchain. The downward slide back in play. Here it is. And this little sell-off is not even extreme on the basis of slope. It's just getting to the -1 sigma. So that's just beginning to suffer. Sniper trades of the day, Bitcoin All the yellow boxes are standard risks. Failure to follow through, breakdown below the dragon through the PSAR. If what I'm saying is not clear to you, put a hold in the chat and I'll revisit. Otherwise, I'm just going to narrate these so we can get through them. Standard exit, about 1R. SSC, so that's a stop and reverse because I'm using the PSAR flip. Standard risk. Scratch. Waited for it to collapse through the PSAR. Standard risk box short. Gift of about another R. I should have stayed longer because of that that huge selling volume. And this ended up going a little bit lower, but I had run to a meeting, so I didn't want to leave that hanging. I just took the gift. So Bitcoin. Let's see, BMY. That is Bristol Myers Squibb. There's the opening. Gap down, crosses the dragon to the upside, breaks the PSAR. So I'm happy to get long on that. Yeah, healthcare has been very strong. So I'm getting long on the breakout to the upside. Sort of the theme for the day. And fail. Comes back through the dragon, half an hour loss. Check or hold. Violates the PSAR, so short with a standard risk box. This is a 50-cent risk. It did not get through the dragon and made a collapsing dragon instead, so second position. Standard exit crossing the dragon, hitting the PSAR, 2 positions. That's about 3R. Missed the short. Devon Energy, 50-cent risk box. It was a big gap up and started to go up, and it was 1 risk box off the low of the day. So I buy it. It quickly fails. So exit. It resumes like a Kata 2, so I buy it again. Micro gain. Missed the short. Should have scratched if I shorted. Kata 2 entry to the long side, check or hold. Fail. Standard PSAR flip and short. Stuck around way too long on that one. I thought this was really going to fail. Missed the 1, 2, 3 exit. This one is instructive. I was so bad on this one. So here was the low of the day. So right about this point, I'm feeling, yes, I'm into it. This thing is going to come down and get to here. And if it fails below there, it's really going to collapse. So I get the short. It reverses. 1, 2, 3 exit is right there. That's where I should be getting out. Got no business staying in that. That's the one I should have had. Instead, I give back almost a full R. So that was pretty bad. Bad form. Missed the short. So this was a bad one. Devon Energy, I just That's about a scratch for the day. Those two, the first two cancel themselves. This loss, now it's down about half an hour for the day on that one. Alcoa, 50-cent risk box. Gap up and go, buy it, quickly fails, 1 hour loss. Re-enter on the Kata 2 to the upside, micro loss. Hits the PSAR short with standard risk to the top of the dragon. Micro gain, like a 1, 2, 3 crossing the dragon, front running the PSAR flip. Half an hour loss. Could not get out of my own way. Finally short, breaking below the dragon. Got paid, so I'm back to about zero on that one. Happy to escape with my life. Brazil, 25-cent risk box. Blue line is the open. Crosses the dragon to the upside, buy it, standard risk, half an hour loss. Kata 2, half an hour loss. Standard short on the PSAR flip, standard risk. Second position. Hulk smash. So that's about 1, 2, 3R. Reshort, another half an hour, almost 4R on that one. Cliff Natural Resources. Crosses the dragon after a gap down, standard up, standard work, half an hour loss. The theme of the day. PSAR flip short. Missed the second entry. Missed the third entry. What are you going to do? 2R. SSC, micro loss, short, micro gain. So about 3R on that one. Rivian, the electric car company, about a 40-cent risk box. 1, 2, 3 entry crossing the dragon and a PSAR flip to the upside and an R loss. Quick stop and reverse. Missed the second entry. About a 2R gain, so we're +1. Happy to escape with my life. Tesla. Cross the dragon to the upside. Half an hour gain. PSAR flip short. 1 hour gain. Re-entry short to the on a Kata 2 to the downside. Missed the second entry. That's about 2R. That's a stop and reverse on an SSC. Half an hour loss. Stop and reverse short. About half an hour gain. Microsoft, I think we saw that one for the, we saw that one, sniper trade of the day. That one was about 1, 2, 3, 4 for the day. 3.5 because we lost half on the first one. Last one, Bitcoin. Using 20 cents on the futures on this one. Short. Missed the second entry. That's a stop and reverse. So that's we're about up 1R. Scratch short. Gift for another +1. Lucky. So those were the sniper trades of the day. Lots of grinding, lots of early reversals on failure for that long side to follow through. So remember, those are all like SSCs and, hold my nose. I just don't believe in them. And when they fail, I get out of them, taking about half an hour loss on them, and then prepared to play the downside. Sometimes that works. Sometimes it was just a grind, but net positive for the day. Just making bricks. Chi Wing Chong. So good. Little Kata 2 action right there. Perfect. Perfect. He's harshing himself. He should be exiting at the yellow. He's on 1 minute charts. He gave back a nickel. Kata 2, quick scratch. Kata 2, got paid for 1.3. PSAR flip, quick exit. Kata 2, a little slow on the entry, as he notes. Still got paid. Still got paid. No follow throughs. No follow throughs. Still got paid. Didn't stay wrong long. That's 2.5 on Devon Energy, where I was fumbling all over the place. Really good work. Strict attention to detail. All right, Paul. I think slow to get it, although maybe not slow. This is good consolidation and a breakout. He thinks he should have gotten out here. I don't disagree. Oh no, he did get out there. I'm sorry. So, and he stopped and reversed to go short, exited, stop and reverse, exited. So he's kind of grinding a little bit in here. Missed the short side entry, which would have paid for all of that stuff. He does get the short here. Gets paid. I thought give back a little too much. Quick exit here. This is the indicated stop and reverse for the long side. And then instead of losing a little bit, you make about 0.3. Great short. With a little more attention to detail in here and here, that turns that positive. So still pretty good. Eugene, back from his walkabout. First trades for 2022. Sees the rollover. Gets the perfect short right at the PSAR flip box, just like you're supposed to. It's like he's playing these on piano keys. So good. He looked at that as a potential second, but he keeps two. Rolls over. Kata 2 short. There was a potential second entry. Keeps two. Quick short, quick exit. Oh no, quick long. Quick exit for 0.2. Let's see, where is this? Quick short, quick exit, 0.25. That's pretty nice. That's about 4.5 for the day. Welcome back. That's how you do that. That's on the cues on 3 minute. Nice work. Tim, back in the saddle. This is looking good. Sees a nice tight wrist box all above the VWAP. Gets the breakout. Good exit. Yeah, potential short, especially collapsing the VWAP. If you take this one, your first test is here to the VWAP to see if it'll hold. Because if it holds, that's going to be a kata 2. So you wouldn't stick around there too long. So that's the uncertainty that you're starting to think about. Those signals make you enter when things are uncertain. You waiting for the confirmation makes you lose twice as much as you gained. There was your instant reentry that probably would have scratched. This is a great reentry. I'd have been tempted here for second position. Great exit on a 1, 2, 3. And you can see the rest of his day. He's timing the turns in the dragon really nice. Back in the saddle for 4.6. And he's trading successfully on the 3-minute now, with no loss of fidelity and no extra anxiety. But that's a good thing. Here's why I think you should be interested in that. You know, the difference between the 3-minute and the 5-minute doesn't seem like that much, but you got to realize that on the 3-minute, you're getting signals at 3, 6, 9, 12, all the way out to 30. On the 5-minute, you're getting 5, 10, 15, ... 30. So you get 6 bars to look at on the 5-minute chart. And you get 10 bars to look at on the 3-minute chart. So you're getting more fidelity on the way the patterns are unfolding, and you're able to see those turning points a little more carefully because you're getting the pulse. Now, what will often happen is when those things line up on the 30 and the 30 and on the 15 and the 15, when now you got 2 sets of populations all firing, when that bar closes, now I got the 3s and the 5s are firing on the 15 and on the 30. So don't be surprised when you see larger jumps, because you have more people that are actually triggering. Whereas all those systems that are waiting for the bar to close, if it's on the in-between, like here, when it closes on the 9-minute, the 5-minute guys still say, hey, I still got to wait another minute for the 10-minute. So you're only getting the guys on the 3s to trigger here. But on the 15s and the 30s, you're getting both of those populations. So it's not unusual to see that as a sharper move. And also on the 60s on the hour, right? So just something to keep in mind. All those mechanical systems that are geared towards execute a signal on the close and then fire an order, that's why those things pop when they do at the close of those bars. The close of the bars and then the open of the bar. And you get that little blip instantly. Don't be surprised by those. All right, let's see what else we got here. All right, I think this is Nicole. So it makes this, so it's down, up, down, up. Now breaks through the PSAR, so I presume that's the entry. Quick fail. And I guess that's your exit signal there at the collapsing dragon. That's where I think your short should be. It doesn't look like you took the short until here. I think that's where the short should be, because the failure of this to follow through is the confirmation of the downside move, and then that would pay off instead of failing. And by the same token, when this rejects, you could probably be short here or short here. Just some things to consider. Follow your rules. Let's see here. This move here, I'm trying to figure out why we aren't short right there on a CD. That just feels like where we ought to be short. And then I'd be probably covering here after that little rebound and then re-short again. It seems like 10 minutes. I still, these still aren't, can't be right. If your MMRB is 15 pips, and I don't know how many you're capturing, but if you capture 10 pips on a 15, that's a 0.67. So it's the number of pips captured divided by pips risked equals R. All right, Luke on the 5-minute Aussie for 3.3 today. Good day at work. He's in the chop. There was no follow through in the chop. Got a little taste. So the 1.2 covers the 2 losses. Now here's your Kata 2 breakout. That's nice. That's a reasonable give back for 1. Great short in the elbow of the dragon. I think we maybe gave back too much on that one, but you know, that's all right. Good scratch. Here was the, oh, I guess you got the entry here. That's a gift that we got to capture. Waiting didn't help. Good short, great scratch. Oh boy, stop being out. But that's a great time to come back in. And that's a great place to get out, as you note. And we gave back more than half our gains, gave back 3/4 of our gains. So this probably should have been 8, not even count. If you count that, it's probably 10. So maybe this could have been 7 with best play in here. Tesla from Jack. Maybe you did better on this than I did. Yeah, you did. I'm not a big fan of that second entry so soon. Because if you only got one position on and you see that those dragon horns, you should be out here. That early in the game. When this closes outside and then opens up and then immediately starts selling off, then comes back here and then open and then starts coming down, we should be getting out here. And now both of those are in the money. And then this is where our short should be. So there was some wastage right there. I'd have been tempted for a second position, either there or here. But that's a 1, 2, 3 exit. That's very good. This is a great short that when that gets rejected and comes out of the dragon and is failing, that's a great short. This is where I'm tempted for a second position when that shelf collapses. Couldn't even get into the dragon and collapses. You might have gotten a little more of a taste. Great exit. Nice work. Did better than me today. Devin, that's another one I couldn't get. You out traded me on this one too. I took the same one, lost. I took that one. Good scratch, good loss. Here's the short, a little slow, but great exit. We should have scratched there. You might have entered short here, or certainly there. Would not have lost money on it, but you were already out of the trade. So that's really, really good work in Devin. That was a tough one to trade. Here's Alcoa. Yeah, this is another one of those where that early morning failure to follow through, quick loss. I'd have been tempted here on this rollover, but that's a great short, good exit. This one, I'd have been tempted here on the long side, probably would have scratched, would try to get short here, would settle for this. I don't mind that one. You still got paid. I thought we give back too much on that one. So this probably with best play would be about +2 instead of 0.6, but you got paid, and that's good work. Getting paid for work. Woj. Wasn't much available. Let's try to not pure scratch, keep a no lose plus dinner for 2. After 7 bars in our favor, we should make money on the trade. Great short. I'd like to see you out here, but that's still pretty good. That was okay, you were out there. Great short, unlucky, great reentry, good pay, good scratch. This is where we got to get short right here. And then that's at least a scratch, maybe makes money instead of losing 0.6. Good long. Reentry was here. So you made the most of what was there. That's pretty good work. Where were we? Great short. When that comes down and rolls over quick, that's the one. Great short. This is slow to re-enter. That's slow to re-enter. So we can get, this could have been +6. Let's see. This one is also Alcoa. Yeah, Alcoa was tough today. I tried this one long and lost, and then tried it long again. Stuck around way too long here, but that's a good short. And then we let a winner turn into a loser. Slow to re-enter. And then we got to be ready to get it here, and then exit it when it touches the dragon skin, get paid for this. And then, yeah, span of control. Yeah, when you went to the 3 extra symbols, that seems to be improving your, you're not as over trading some of these other symbols. That actually looks pretty good. Let's see. This is Devin. Yeah, Devin was hard because I tried this one right away and failed. Then tried this one. So there's, I think this entry here, you could be getting that right here, because your pattern is this. It's almost like a caught a 2 and it's holding above the dragon. So that's possible, or an emerging dragon here, and instead of here, and then both of those would get paid on that exit, which is a great short. That's a great long. Good. Then the reentry is here, which would pay for the loss. And there's your SSC to the long side. So nothing to show for it except some good learning. All right, that's everything we got for today, guys. And we'll get ready for tomorrow.